Okay, good morning everyone, and many thanks to CAPA for inviting me to speak today. So after the first panel, I think it's time to move into the 21st century, and I think we need to update some of our banking colleagues on the real world. I know that some of my colleagues on the panel later are all very enthusiastic to get their points out and to point out the real Asia today rather than the Asia of yesterday. So why don't I just start off by setting the scene a little, and what I'd like to do is just talk about potentially where is the money going to come from in the 21st century. So I'm going to start off, give you a very quick potted history of aircraft financing in Asia, talk about what's going on in the real markets, and particularly growth of wealth in Asia, the Asian banking scene, the rise of the Asian bond markets, which has been nothing short of phenomenal over the last 2 to 3 years. And then talk about how can we as an industry offer bond investors something in the future that's going to interest them. Because the key thing about the bond markets is you are competing with every other industry who's trying to raise money. And as an industry, we need to get this. And we need to position ourselves as being a good investment. Otherwise, everybody in the industry will suffer. So, let me just talk about aircraft finance. Particularly, the Japanese banks have been very active participants in this market since the 1980s. And if you wind the clock back to the late 1980s, actually, they were the largest proportion of the aircraft financing market. Since then, other Asian banks have joined them, and in particular, if you go to China, Korea, Singapore, Taiwan, Malaysia, and India, all of them have strong relationships with their own domestic carriers. Where they differ is they didn't do a large amount of financing outside of Asia. Our own bank, Bank of China, has been actively financing airlines for over 36 years and are now the largest aircraft financing bank globally. Now, Asian airlines have also been able to tap other financing markets other than banks, in particular the local currency bond markets. We haven't seen much cross-border issuance so far, but two names in particular have been to the Singapore bond market, Emirates and Cathay Pacific, that had very successful transactions. So the key challenge here in Asia is we have a huge market, but we need to make cross-border deals work to make it most efficient. If you just take a step back and say, well, okay, so how have airlines financed themselves in the past, back in the 20th century? Well, it's, as we heard from the previous panel, export credit financing, but the rules are going to change from 2013, traditionally dominated by European and US banks. We've seen the general commercial banking market, a growing large syndicated loan market in Singapore and Hong Kong, local Asian banks becoming more expansive in their lending, and recently we've seen deleveraging in Europe begin to limit the European participation in those marketplaces. And finally, the debt capital markets. There's always been a vibrant Japanese debt capital market. If you go back to the 1980s, there's a lot of samurai bonds issued. If you go down to Australia, there's been an active Aussie dollar bond market as well. And we're beginning to see other markets emerge. Now, let's take a stop and say, that was the past. What about the future? So let's look at the future. Where will the top 50 wealthiest cities in the world be? Well, surprise, surprise, the shift is going to move towards Asia Pacific. And if you look at the list of the names that we show here, in terms of the newcomers, I think you would find a lot of Western commentators would find it difficult to place those on a map. If you look at the names that are about to drop out, I think they know a lot about those names, because a lot of them, Athens, good starting point, Barcelona in Spain, I think it gives you an idea of what's coming. So the growth will shift to Asia, which is why we have a vibrant, growing, low-cost carrier market, because we're seeing more wealth here in Asia. That also extends to private banking and wealth creation. So we also need to look at that side of the equation. Let's look then at where the world's largest cities are. Now, it's notoriously difficult to measure the number of people in an Asian city, because I think you know there's a lot of migrant populations move around, particularly in China. But this is an attempt we've made at this week. And if you look, the number of cities with more than 1 million people in China is greater than the whole of the EU. We've got India with another 52. And then we have other parts of Asia that together make up over another 50 cities of more than 1 million people. This is what is driving LCC traffic, and also in the future will drive wealth. Let's talk about wealth for a moment. Where are the top 10 wealthiest cities in terms of households? Well, if you look at it, number 1 is now Singapore. 17% of the population are millionaire households. Okay? Look further down the list. Hong Kong sits at number 5. Taiwan sits at number 9. We have a great concentration of private banking wealth here in Asia. I don't see Germany there, or the UK, or France. Okay? So we need to think forwards, and we need to cater for that $40 trillion of wealth that will be around by 2016. They need to have something to invest in, and we as the aviation industry need to take part of that. So let's talk about strong banks. Vincente was talking earlier about banks. The strongest banks in the world by Tier 1 capital, Basel III Tier 1 capital, are mostly Asian and Canadian. The only European bank that's there is in 10th place, a Swedish bank. So that is the reality. This is where the strong banks are, and these are the people who have the ability to lend money in today's market. And so if you look at the local syndication markets, that is where you'll see a lot of the activity going on now. Now let's talk a little about the loan markets. And what I'm going to do, I'm not going to talk about the aviation industry. As an industry, we talk too much about ourselves. I'm going to talk about the general markets in Asia, because I think everyone needs to understand this. So let's talk about the general cross-border syndicated loan markets in Singapore and Hong Kong. Yes, it is pretty much plain vanilla lending that takes place in these marketplaces, and there are relatively less specialist aviation teams than we may see in Europe or the US. But we have some good examples. DBS in Singapore, China Trust in Taiwan, and generally the tenors that they've been lending have been shorter than we've seen in export credit markets. You know, we haven't seen a lot of 12-year commercial loans over the last 3 or 4 years. But these are relationship banks, and relationships in Asia count. And so it's very important to ride through the downturns with your relationship banks. And I can tell you, here are we as a Singapore-based company. In 2008 and 2009, our Singaporean banks continued to lend through the crisis. And this is very, very important, because when's the best time to buy planes? At the bottom of the cycle, when no one else is buying, because that's when prices are best, and that's when you want access to the capital markets. So building strong relationships here in Asia is very, very important. Now, aviation was not a favoured name except for the well-known brand names in the airline industry. Singapore Airlines, Cathay Pacific. But that will change over time because of the shift that we're seeing towards leasing. And so again, as an industry, we have to do an education. And if you go to a bank and say, we're going to give you a portfolio of risk spread across the whole Asian or global airline industry versus taking risk on one single airline whose name they don't know, they will choose the portfolio approach. And that is the same approach we need to take with the bond markets. But the point I want to leave you with, it's a myth to say the Asian markets does not have depth. It does. And we have the world's strongest banks in this region. So let's take a look and see whether that's true. Here I just show you the last full year of activity based across all currencies, and you may be somewhat surprised to see State Bank of India with the largest arranger of loans in Asia last year. If you look across those names, you'll see a mixture of Chinese, Japanese banks, Singaporean banks. That is a fairly well spread group of banks across Asia. Okay? Let's talk about international currencies, so currencies outside of their home country, and the list doesn't change a lot. The one that did change is State Bank of India, because they did a lot of local currency lending in India. But when you look at the cross-border activity, it's the same Chinese, Japanese, Singaporean names. And not a lot of European participation. So let's talk a little about the local Asian names. For the Chinese and Hong Kong-based banks, we're seeing a lot of activity coming out of offshore branches of Chinese banks in Asia. And particularly if you look over the last month, PBOC released money into the Chinese banking system in US dollars around August the 16th, and we've seen a lot of activity building over the last 4 weeks. And you will see the impact of that activity as we run in towards the end of this year. The Taiwanese banks, they've become more active participants. Traditionally, they tend to focus on their domestic market, but now they're beginning to move overseas, and we've seen participation from them in a number of syndicated facilities. Singapore, 3 of the strongest banks in the region are based there, very relationship driven. And Malaysia as well. I can tell you, Malayan banking have done a lot in this industry recently. And we've seen a lot of activity begin to emerge from the Malaysian banks. Let's turn into the others, you see. India, which tends to be more inwardly focused on the Indian domestic market, but particularly for local currency deals, they've become very strong players. As I mentioned, State Bank of India was the largest player in Asia last year. The Korean banks also, they've been moved offshore a number of years ago, and we begin to see some more participation from Korean banks as well. So that's the banking markets. Let's turn and just focus on the capital markets. There are developed markets in Japan and Australia, which I've already mentioned, but now we're beginning to see the emergence of Singapore and Hong Kong, and I'm going to talk a little more length on those 2 markets. Domestic local currency markets are growing. We're seeing sort of, particularly in China, the emergence of China market. If you saw last week, China came to market with a fairly significant local currency offering. We're also seeing some of the small markets begin to move into market as well. The key thing is, for our industry, people tend to want net US dollars wherever they can. And so the key thing is there a local cross-currency swap market between the local currency and US dollars? And this is particularly important if you're a lessor and you've got US dollar assets on your balance sheet and you want to have US dollar debts on the other side of your balance sheet as well. But I can assure you, both Singapore and Hong Kong have vibrant cross-currency swap markets, and we're beginning to see the emergence of the Chinese yuan as well. Now, most of the activity until recently in the Singapore and Hong Kong capital markets have been household names. Singapore Power came to market earlier this week and did a large facility, which if I remember correctly got priced at Treasury plus 115 basis points, and it was sold within minutes. Other blue chip names, Temasek, other government-linked companies have come to that market, and over time this has built a large following, particularly from private banks. But if you're not a well-known Singaporean name, then generally a rating is needed, and we're beginning to see more activity now with companies getting external ratings. It's helped by the fact that Singapore has become a major private banking centre, and a lot of funds from other parts of the region have moved into Singapore private banks. The same we see occurring in Hong Kong as well. And so because of that, we're seeing good issuance streams in Sing dollars, Hong Kong dollars, and more recently, offshore renminbi as well. Within that, so far though, there's been very little aviation industry related issuance, mainly just local names and local markets. Cathay Pacific came to Singapore earlier in the year. We saw Singapore Airlines do an issue last year. And so this is something that needs to change. Now, so let's look at which foreign issuers have been coming to the Sing dollar bond market. As of today, over 25 billion Sing dollars of bonds have been issued by foreign issuers in Singapore. $25 billion, okay? The number I give you here was a week ago. And by the end of the year, it's going to be significantly more than this. This is more than everything that was issued last year in Singapore. If you look at then recent transactions, you'll see a potpourri of names there from Bank of East Asia, the well-known Hong Kong-based bank, VTB Bank in Russia. Well, if a Russian bank can issue notes in Singapore, why can't a well-known airline? No? There will be appetite. There's a number of property companies there. And you'll see there is one aircraft leasing company, which is ACG. It's not often I advertise our competitors, but on this occasion I'll let it slip. These are foreign issuers. In addition to that, there's been a number of major local issuers, of course, in this marketplace. Now, there's one particular deal I thought I'd just mention, given we're in a casino, which is Genting Singapore, one of the competitors to the casinos here in Macau. They basically came out in March this year and issued 1.8 billion Singapore dollars of perpetual capital securities. Okay? The coupon there is about 5%, and just to give you a feeling, if you put it in US dollars, it's 1.45 billion US dollars. But in this issue, what surprised everyone was, number one, the speed it sold out, and in particular, the amount of private bank interest. 78% of that number went into the private banking sector, into private bank accounts. This is a market that is growing dramatically now in Asia, and as an industry, we need to tap. So what does it take for our industry to tap this market? Well, let's take an example of another industry that's done it and say, you know, were they successful with international names coming? An example I used is the commodity industry. And we've seen a number of European commodity firms successfully have tapped the markets here for US dollar deals. Glencore, Trafigura, Louis Dreyfus, Vitol. So they're not just one-offs. To do this, they've had to do a lot of work to get there though. In particular doing what we call no-deal roadshows, which mean you come and present your company to the investors before you bring a deal to the market. And it's also had a knock-on effect of helping familiarity with local commodity firms which are based here in Asia. Now the tenors began as shorter tenors, but they've gradually moved out. And in particular for these companies, it's broadened their investor base away from the major local banks. So let's say if we as an industry went to the bond markets, what could people finance? The obvious thing is airlines. But hold on. I changed the title of this presentation from financing the Asian aircraft order stream to financing the Asian order stream. Because there are a lot of orders in Asia coming from other companies that aren't just for aircraft. We have a significant supply chain now here in Asia of people providing parts to the ultimate manufacturers of aircraft. We have major airports, the largest in the world. We have significant operating lessors in the region, and we have a lot of MRO activity that is only going to grow when all of these aircraft that we've talked about delivering basically start putting those into maintenance as well. So if you begin to look at the names, people always talk about the aviation business, and the next part of the sentence is weak credit ratings. It's a myth. Let's talk about the aviation industry rather than just the airlines. This is actually a strong industry. Obviously, we have the largest airlines. If you take Japan Airlines, the second one there, who've just raised a huge amount of equity in the IPO market, having only gone bankrupt last year. So we know there's significant market interest, even for a name like that today. The major Chinese airlines, Singapore Airlines, Thai Airlines, you know, all of these are well-known brand names in our own market and across Asia. And they have significant revenues in the billions of dollars. Look at the airports. Beijing Capital, one of the largest airports in the world, and with a flow-through of 77 million passengers a year. You know, there are other airports on that list that would be attractive to bond investors. Changi Airport in Singapore, for example. The leading MROs in the region. Singapore Technologies is part of a group, one of the few very high-rated companies around the region. You know, if you're, as a bondholder, could end up with a portfolio of a mixture of airlines, airports, and operating lessors, as well as airlines, that would be a pretty attractive portfolio. And finally, supply chain companies. People don't tend to focus very much on this side of the industry at the moment, but I think that's going to change as time goes on. And if you look at the market capitalization of some of those quoted companies, Bridgestone in Japan, $17 billion. Mitsubishi Heavy Industries, Kawasaki Heavy Industries. And these are players who have been in this industry for a long time, but we need to sell the fact this is a substantial industry that basically has good risk to be taken. And as COMAC evolves over the next 4 to 5 years, that will also become a major manufacturer with its own supply chain. So, let me bring this to a few conclusions. There is definitely a vibrant capital market beginning to grow here in Asia. Okay? The banks are some of the strongest in the world, and so there is plenty of opportunity. And plenty of opportunity to marry that growing Asian wealth with the aviation business. It's our job to make sure it's a happy marriage. The focus so far has been on regional high-quality name lending by the banks, and now we've got to move to the next stage and talk about how to get these companies into the capital markets. In the case of the airline industry, one way we can do that is, as Foster mentioned earlier, broaden acceptance of the Cape Town Convention, which will open up secured bond markets for aircraft. The second way we can do this is encourage more companies in the region to obtain credit ratings, which then means for those bond investors who need a minimum credit rating in order to invest, which tends to be part of their DNA, particularly for insurance companies, pension funds, and other types of bond investors, the more companies with credit ratings, the better, so that they can build broad portfolios. And then finally, build the awareness of developing markets here. It's not just the Singapores and Hong Kongs. There are a lot of aircraft being delivered into Indonesia, into India, into China, so at the same time we need to raise all boats together and basically make sure that those traditional concerns that people had about credit, we give them a balanced view and we talk about the industry as a whole. How do we do this? Education is definitely needed. Education of investors, seminars with private banks, work with the Asia Pacific Loan Market Association on the bank side. The banks have a role, the research houses have a role, CAPA has a role. You know, next year's conference, let's have a bunch of private bankers here. Okay? Sure, it will certainly change the flavour of the conference. And then finally, also make sure that we grow the cross-currency bond market, cross-currency swap markets. And this is something that we need the banks to do in particular. Particularly for Chinese yuan, which is beginning to happen, and for other emerging currencies. So if we take our time, do the groundwork, and make sure we sell the industry as a whole, in my view, there's a huge wealth market to be opened up here in Asia. And hopefully then, that will give new source of financing to support the banks. The banks will never disappear, let's be clear. They will always be there. And we need them there because they're the people who will arrange the bond financings. So we need them to have research capability. We still need the export credit agencies. But let's try and open up a bond market here in Asia to support export credit debt as well. So there's many things we can do. Michael is with Jackson Square. Now Michael has many, many years experience here in Asia, having previously been with the Transportation Group, having arranged over $10 billion of aircraft financings, and now is based in Singapore with Jackson Square. So, with that, we just have the questions up. So guys, all of you have some type of background in banks and dealing with European banks. What do Europe's debt woes really mean for those people who are raising finance here in Asia? Simon, do you want to kick off?
Sure. I mean, at Avolon, we learned a very harsh lesson on the exit of the team from RBS, in that relying on one source of capital to support a lessor specifically is a very dangerous place to be in when the company itself is fundamentally sound, but your shareholder runs out of money. And in the time that we put Avolon together, we very much focused on diversifying funding sources, both on the equity side and on the debt side, to ensure that that doesn't happen again. So we today have 4 equity backers of Avolon, of which one is GIC in Singapore. And then we have a pool of about 25 banks who are lending to us all the time. In terms of the European context of that, I would say when we started out, there was a pool of banks prepared to lend to us, and a large proportion of that, the book that we've built, has been backed by European banks. However, increasingly, we are seeing Asian banks enter this space, and I think there's a growing curve for them, Robert, in terms of understanding the industry, moving away from their traditional support of their domestic markets. So, you know, European woes is essentially just transferring where banks have traditionally lent to this industry, and is transferring it to a more Asian base. I think that's a quick summary of how we see it at the moment.
Leonard, you were with a German bank previously. What's your view on how it's going to impact financing here with some of these banks having withdrawn from the marketplace? And do you think they've all withdrawn, or is it just some?
I think quite a few banks have withdrawn from the aircraft financing. HSH being the prime example, used to be one of the biggest, if not the largest, aircraft financing bank in the world. But I think what happened in Europe in 08, 09, there's a shift. There's been a big shift into Asia, where everyone seems to think that banks in Asia will finance. What I feel is that despite that, it isn't as easy to get financing from Asian banks. I mean, the regional banks are very focused on credits that they know. Some of them are opening up and they're looking at other credits, but it isn't easy, as easy as it sounds.
Okay. Now, Michael, when you're at TTG, you're obviously dealing with banks from all over the world, and so you have a fairly unique perspective where you're not biased in any way by who you were with before. In your view, how do you think things have changed? Is it really as dramatic as they painted?
Well, I think that to some extent, you look at a lot over the last 10 years, the banks that were very active in Europe, although they have pulled back. I think the name of the game is you always want to go to those markets that do have deep pockets. And Asia right now is stepping up. Obviously a lot in Japan, a lot in Australia, as we've seen from the slides before. The market, to some extent, tends to account for any shortfalls in other areas. You see banks that used to be involved coming back into the market. As margins increase, it's something that they're interested in. As lessors, though, I think that it's our job to find, or not just find, those people that are interested in providing the financing, but educating new lenders, teaching them that, maybe it's better for them also to think about investing abroad in airlines and other parts of the world.
Okay. Now, all of you are with well-known operating lessors, and you all raise finance in the marketplace. For your companies, what are the other things going on around the globe that sort of your treasurers think about when they're going out to raise finance? Yep, Michael.
Well, from Jackson Square's perspective, one of the things that's, I mean, we're obviously concerned about what goes on in Europe, mostly as it will affect other markets around the world, but one of the things that we're trying to do is always look toward new sources of financing. So for Jackson Square, we're still relatively a young company, so the U.S. capital markets are going to be a place that we're going to focus on in the coming year. Once we get some other business out of the way, we'll seek to get rated and you know, try to attack that market the best. But that being said, we're trying to expand our business in Asia, not just from an airline perspective, but from borrowing from banks in Japan, Australia, Singapore.
Yeah. Simon?
Yeah, look, I mean, it's a constant chase for where is the current pool of liquidity. I think what worries us here is perhaps the degree of selectivity that exists within the market, the degree of education that we're having to do, the recognition that maybe fully amortizing debt is not where we'd quite like to be, trying to get banks to understand the balloon risk, that this is an asset finance business, not a credit name business. All of these things are going on, and it's a dynamic environment as you move around the world looking for pools of liquidity. I think you're right in your presentation. The liquidity is here. I'm not particularly worried about that. It's getting it in the shape that you want it and delivering it to the market at the time that you need it. Those are the dynamics that we talk about.
And Leonard, from an Aircastle perspective, you've been one of the active users in the past of the securitisation market. Do you see that market opening up again as an alternative?
Yeah, well, I think Aircastle has been successful tapping the capital markets in the US, and they've always been in the market for that and been quite successful doing that. On the securitization, I 50-50, as to when it will come back and how successful it's going to be. I mean, what would be interesting is if we could get something in Asia, I mean, from an Asian context, for lessors to open up that part of the market.
Okay. Now, when we talk about financing structures in the marketplace, one of the financing structures that used to be very attractive was, of course, the Japanese leverage lease. And when we think back to the late 1980s and sort of early 1990s, that was probably one of the predominant sources of new equity into this marketplace. Michael, you had a lot of experience back in those days of sort of arranging Japanese leases, that type of thing. Do you see the Japanese lease continuing? Do you see other structures that may begin to appear in the marketplace that people will begin to tap?
Well, we still see, I mean, post-2004, I don't think the Japanese leverage lease or JOLCO has been as effective as it was prior to 2004 for a various number of reasons. However, where we see it very effective still is foreign flag carriers, very good brand names good names that are good brands in Japan. To be quite honest though, as far as it competes against Jackson Square's sale and leaseback product, we don't see too much crossover in the sense that the airlines that the JOO, the JOLCO go after are usually not airlines that we would predominantly do a lot of business with, except in cases like, say, 2009, 2010, where there was really a shortage of capital.
Okay. Now, in terms of sort of capital and capacity for the marketplace, how do you guys feel now looking forward to the next 2-3 years? Sort of this morning we had thrown up there could be a big funding gap coming. Does that tie in with your own plans? Do you see a funding gap coming, or do you think actually guys like yourselves are looking to grow into the marketplace over the next 2-3 years? Maybe Simon, you're a fast growing.
Yeah, look, I think we all saw this position coming in 2007, 2008. So a variety of lessors got off the ground at that point, and they're now successful, established lessors, and they've grown in that period of time. And I remember at the time, everybody said, oh my God, all these lessors are starting off, what are they going to do? Where are they going to find the business? And you know what? They found the business. And as we continue here today, and I think the previous panel, was very focused on 2013. Well, in my view, most of the business that needs to be done in 2013 has already been done from a lessor perspective. We are now in the current final pool of RFPs for 2013 deliveries. And, I'm not seeing any shortage of appetite amongst the lessors to finance those planes. And we're talking about 2013 deliveries there. So that will finish it off. So if you get to the end of this year and you haven't found your volume for next year, in the leasing pool, it will be a very small pool because those deals are done. We have a large proportion of deliveries coming next year, which we're committed to, and we always match funds, so we have the debt and the equity lined up for those deals, so they're done. So in my mind, Robert, I'm not particularly worried about it. And look, let's have a chat again this time next year about 14 and 15. But really, I just think part of a lessor's job is to channel liquidity and give it to airlines. And I think we have been successful at doing it. And I think we're continuing to be successful.
Okay. Now, Leonard, earlier people said, well, maybe used aircraft market's more difficult. I think at Aircastle, you've had a slightly different strategy to other people. Just talk a little about that as to what Aircastle's been doing in the marketplace. In terms of sell leasebacks, that type of business?
Yes, I think in Aircastle says what we find where we feel that we have a better advantage is looking at sell leasebacks of wide-body aircraft, new wide-body aircraft, as well as looking at mid-age assets aircraft, and that's been quite successful for us, and it's been working pretty well. I think the issue always comes to when you have, it takes a lot more effort in managing these assets because they're older, but it's worked for us pretty well.
And then on the other side of your book, on the liability side of your book, if I remember correctly, I think you've used quite a lot of unsecured debt to finance this, and this is a way of getting away from this illiquidity issue.
That's correct.
On the secured aircraft market, is that correct?
That's correct. So I think in April we raised 800 million in unsecured debt in the bond market, and what we've done, if I recall correctly, we repaid some other facilities. And what's happened now is that about 40% of our book is unencumbered.
Okay. Michael, from your perspective, how do you see the next 3 years in terms of type of business that you'll want to do from Jackson Square here in Asia?
We'll continue to focus on the sale and leaseback market. One of the things that, from Jackson Square's perspective, we find that we have no speculative orders. For two reasons. One, we can't get any in the near term in any meaningful way. And for the ones that are out there that far, we choose not to speculate that far on what demand will be. We see ourselves more as a provider of capital to the airlines that need to help fund their capital expenditures. So looking at the next 2 to 3 years, we're going to be very active in working with airlines with large order books, or even some of the smaller ones that normally wouldn't have access to anything other than export credit or Exxon. As those prices go up, we think that those airlines might turn towards sale and leasebacks as a more cost-effective solution.
Now, we've been a little controversial compared with the panel earlier on today, so I think probably it's time, before we move on to the next part of our questions for the panel, to open up to the audience to see if you've got any questions you want to ask before we go into the next part. Does anyone have any questions at this point? Oh, one straight at the back. You just state the name of the company.
Okay, I'm Susan from Avolon. I have a question for the panel. Maybe this is a kind of big, kind of long question. We have observed that recently in Asian market, especially in China, Taiwan, Korea, there are a wave of phasing out the old aircraft. And these are 747, 767, 737, 300s, and even more. So I just wonder, we have been observed that, more new aircraft being ordered, and getting more difficult to finance. So how will these old aircraft, do? I mean, who will buy them? Who will provide financing to them? And especially for the current soft the cargo market, is there cargo conversion potential for these aircraft? And also, would that be a threat to the overall aviation business? This phase of, this wave of phasing out of old aircraft.
So basically, this is unlocking the capital in existing aircraft. We have to reinvest it in new aircraft and fleet rollovers. Any volunteers? If not, I'll choose one. Michael, go on.
I'm not sure if I got the full part of the question, but Jackson Square right now, at least as a part of our business plan, does not look at anything older than, say, 2 to 3 years. In terms of placing our own aircraft that are brand new 12 years in the future, one of our concerns at this point is various of the countries around the region that are implementing or have implemented age restriction on aircraft. And from a US lessor's perspective, I don't know if Avolon has a different model or if BSE has a different model, but if you look at sort of a 25-year expectancy life of that aircraft, if you can't place it somewhere at year 12 in a country that has favorable regulations or with a credit that you're comfortable with, you obviously do have a problem. Maybe we'll sell them to Aircastle at that point.
Simon, what's your view on this?
Well, first I'd like to say it wasn't a plant for me to Susan to ask that question, right?
But you'll have the answer prepared. Yep.
And could you tell me if you're going to ask a question next time? But, for us, we clearly don't play in the older aviation market space at the moment. We did do when we were at RBS. If I understand the question correctly, I think, and paraphrasing it, are you telling me or asking me how I think older aircraft will get financed? I think there's a gap, and I think Vicente said it earlier, it's DVB and PK who are in the market at the moment. If I was sat back in RBS at the moment and I had capital, I would be pushing for that market quite hard, because I think there's an excellent opportunity to finance planes in that market for airlines and lessors alike at attractive risk-adjusted returns that should make sense to the capital committees of the banks. And maybe it's just in our mindset as lessors that we continually try and find the little angle to make the money in this market. That to me is the obvious market that isn't being addressed properly, and I'm sure Vicente is doing very well at the moment on the back of the lack of players there,
Is there a way we could open up the capital markets for this business? In the US, the
WTC
EETC market finances older planes. What do we need to do that here in Asia?
I think from an Asian perspective it's tough, because we're continuing to educate and bring the banks up the curve. So to add on to that, older technology aircraft at this stage of the development, I think it's doable. It's just a labour of love that somebody's going to have to take on. And I would have thought that would be a great project for the Aircastle guys, because that's more their area of the market, rather than us as predominantly new technology financiers.
And by the sound of things, it almost needs to be financed by unsecured debt, and then you don't have to worry about the limitations of the secured debt market.
And
Leonard,
that's exactly the point, Robert. So what Aircastle has done is successfully tap the capital markets and fund these so the full equity deals. But the returns work for us. There's not as many there's not much competition in that part of the market, and we see it as something that works for us. Yeah.
Okay. So this is where the role of the lessor as the intermediary moves close to that of a bank. If you think of a bank, what does a bank do? A bank takes unsecured deposits from its customers and it lends out money on the other side to people like us. So now the operating lessor is taking unsecured money direct from bondholders and is basically using it then to finance aircraft, used aircraft that they can put on operating lease. You know, the concept is very similar, and so this is something as an industry we have to sell. Okay. Any more questions? Yep, David. Then we'll let Johnny have his moment.
Good morning, I'm Dave Nixon from ILFC. Just a question for my colleagues here. We see a lot of large orders by Asian operators being financed by short-term sale and leaseback transactions. So these aircraft are coming back on the market in 6, 8 years, sometimes less. Where do you guys see these airplanes going, and how do you see that as affecting the rest of the market in general?
Simon, do you want to kick off?
Yeah, David, your question, I think, is more around the placement of planes in 6 to 8 years' time on the back of the sale and leasebacks that are being done, right?
Exactly.
So, for us, we haven't historically seen it as a problem. I think, to be able to address the placement of planes in an efficient manner, you need to have experience in this market, and relationship reach counts for everything here. So you need to know every airline in your patch, and needs to know who wants planes and when. I think there are those lessors that have that covered and plan for that, and then I think there are probably those that haven't really thought about it. So they will have to learn very quickly as the lease end approaches, and I would say there are a number of institutions who are reaching that stage, who are perhaps newer to this market, who haven't been doing it for the 15, 20 years that some of us have been doing it. So my short answer is relationships count for everything here, and you know as well as I do that there are always pockets of demand for planes around. Some of them are challenging jurisdictions, challenging airlines, but knowing what to do and experience counts for a lot in those situations.
Now, I think there's another issue to add to Simon's, which is we're in a unique economic environment at the moment. US dollar interest rates have never been so low. US inflation is very low. As we move out of the present financial situation, and all of those US dollars that have been flooded into the market by the US Treasury, and there could be another QE3 coming later this year, they're going to need to find a home. What's going to happen is that's going to drive inflation. Inflation will pick up, and then interest rates will be pushed up as well to deal with the inflation problem. And thus what's going to happen, we're going to see a much wider differential going forwards between newer aircraft and used aircraft. And this is something we as a leasing company have been spending a lot of time on. Because at the moment the lack of inflation means that the gains on sales are much less. It also means that the differential between a new aircraft lease rate and a used aircraft lease rate is much smaller than it is in a market where you have a 5% interest rate. Today we have treasuries, 5-year treasuries at around 60 basis points. That's not normal. A normal interest rate environment is treasuries up at around 5.5%. And if you calculate the economics out in a leveraged industry, the lease rates are much wider apart than we see in today's market. So providing people have done long enough leases, then this will also help the situation. Michael, have you got anything to add to that?
Well, I mean, not David already know this, but it's, the two things if you're going to play in that short term or midlife sort of leasing, I would think, is that you're going to have to make sure that whatever return conditions you negotiate at the front are probably going to be, well, you're going to want to make sure you get that aircraft back in the best condition possible, so that as it is going to be considered a used aircraft. And I think that's also something that's changed over the last sort of 5-6 years. The 5 or 6 year old aircraft is considered used. That whomever your new financier is going to be able to say that I'll finance it because you've got basically a zero-tolerant aircraft. That's what they'll want, I think.
Now, Leonard, this 6 to 8 year old aircraft, that's your sweet spot as we understand it. So you're a potential buyer of those aircraft then, aren't you?
Right, yeah. So, yeah, it's something we definitely look at quite a lot, very often. But I think as in Aircastle's case, currently we're not as bullish on like the 320 market, for example. So we're trying to temper that and manage it on a portfolio basis as to what how it's going to work. Because
Okay. Now, is the fundamental problem here the sale leasebacks that are going on, or is it something different? Is it that the aircraft supply coming into the market from the manufacturers is greater than the growth of traffic going on in the marketplace? What's your view on that? Any views?
Well, I think also the thing you've missed there, Robert, is perhaps the technology changeover as well. So there's a few things at play at the moment in terms of the Neo and the Max coming online, which is creating uncertainty. There's been a fair degree of chat regarding production rates. All of these things go into the mix. But as somebody was saying earlier, to me, it's a timing issue. They tend to address themselves over time. There are periods of catch-up. So, we've deviated somewhat in the topic here from financing now to aircraft placement, which is kind of interesting, perhaps because we're more comfortable in that environment. But the current discussion and debate in this area, to me, is all about technology change, and I remain optimistic that it will work its way through the system as previous technologies have changed over, as long as our market continues to grow in the way that it's grown over the last 20 years.
Johnny, I think you had a question.
Thanks. We have been witnessing the market share of operated lessors in aircraft financing going up very quickly in the last few years. And actually, the airlines' attitude have been changing, sometimes because of the residual value concerns, and secondary be liquidity concern. However, we find that operating lessors cannot satisfy all the demands from airlines through sale leasebacks or just outright operating leases. For example, PDPs. For example, interest rate risk. Why don't you guys provide fixed option for us? How about local currency lease rentals? Okay, can the panel answer this question in respect of your understanding of the difficulties and maybe something that you think you can do in the future?
Sure. Johnny, as always, you're spot on. Things like PDP financing, fixed deals, they can be done, but they tend to be at a price, okay? So if we come back to our position as disintermediators in this market and channeling funds through to airlines, we can only do what we can get from the banks, and we can only achieve what we have time to do in a day. Unfortunately, those things have fallen outside of the core deals that have been done, but elements of PDP financing come along, and we've certainly done some PDP financing in the past. We've looked at fixed, right? But the question back to you would be, are you prepared to pay for that? So there's a risk premium adjustment that needs to be factored into that proposition, and I think they're doable, but there's a price.
Michael.
One additional comment, you'd asked about currencies. Especially operating in this part of the world, it's something that Jackson Square has looked at, and we'd obviously like to try and figure out a way to offer multiple currencies. But at the end of the day, you know, we're really looking at purchasing a US dollar asset and taking a residual risk on a US dollar asset. This might just be Jackson Square, but and maybe some of the bankers can answer this better than I, but we may just not have the scale to enter into currency swaps that are more cost effective than what you're already getting from your own banks.
And Johnny, one thing probably to bear in mind, we have to leave some business for the banks. Otherwise they get upset if the lessors take all the business. So this is actually where they can add value. Cross-currency swaps is their day-to-day business. And in particular, one way airlines can help improve that situation is getting external credit ratings, which then broadens the universe of banks who are prepared to do that business with them quite significantly. Same thing with fixed deals. The easiest way to do a fixed deal is take a floating rate deal from a lessor and do an interest rate swap. Yeah, and we have a number of our more sophisticated clients who basically are doing that. They'll take a floating rate lease from us. Maybe the price we offer on the swap may not be as interesting as their friendly local bank, who then basically they'll then do some type of swap with, or maybe even not a swap, maybe just buy a cap. So I think banks have a whole range of broader financial instruments they can use than an operating lessor who's probably more tied down by what their shareholder wants and telling them to stick straight forward to a US dollar-based business and try and match fund wherever possible. Do you guys have any further views on that?
I think you're right, Robert. I mean, it's a bank's traditional market. So, you know, they have, you know, gazillions of people doing this sort of stuff, and maybe they should focus on that, supporting that side of the business than perhaps the more speculative prop trading stuff that we've seen. But, you know, it is their more natural home rather than our natural home.
And uniquely, we're owned by a bank, so afterwards I can have a chat with you. We can probably deal with that for you. Right, let's move on. Does anyone else have any more questions before we go back to ask the panel some of the prepared ones? No? Okay, well, let's go back. Now, growing competition in the marketplace. First of all, is it really growing? Do we really see a lot of new players? And if we do, how is it impacting sort of the business here in Asia?
As you're asking that question, is it really growing? Look, we've seen lessors come and go in this market over the last 10, 15 years. The intuitive feel is that there are more lessors now, but actually, are there really? Possibly a little more. I would say some are taking more risky positions at the moment than we've perhaps traditionally seen. Yeah. Our view is a lessor should balance itself between doing sale and leasebacks, placement activity, a little bit of trading activity, a little bit, not too much in any bucket. Some have gone a different route and have ordered a lot of planes, and particularly in relation to their experience. And I think those stand out. And when we're commenting on anything that's going on in our market, we tend to pick the things at either end of the spectrum rather than focusing on the core business that's going on. So yes, there are potentially a few more players around, but there are not that many more players. And yes, a couple of people look to have perhaps initially taken on some risky positions in the leasing market that they may struggle with in a few years' time. So I think the market is growing, the number of players should be sufficient to address what the airlines need at the moment, and I don't think it's a radically different market to what it was 10 years ago.
Okay. Leonard?
I think what Simon said, is correct. For sure, there has been some growth and new competition, but essentially there's sort of an equilibrium in the market, and yeah.
And Michael?
No, I agree with the most part. I mean, I think, I'd like to say that on some of our deals we'd like to see less competition, but ultimately that's to the benefit airlines, and if we weren't making money at it, there would be a lot less. So I think you have like Jackson Square, for example. If you look at sort of the timeline of Jackson Square, you could trace us back to 1988 when we were Pegasus Aviation. So I think the industry in general goes through maybe some contraction, some expansion, but all in all, a lot of the players are still the same.
Okay. Now, if we turn the clock back to sort of the year 2000, I remember going to an AAPA conference, which is the Asia Pacific Airlines Conference, and the Director General of the AAPA stood up and said, low-cost carriers will never survive here in Asia. Whoops. We all know in Asia now, low-cost carriers are a significant part of the marketplace. Markets evolve over time, and particular when people can bring in ways of saving costs and new ways of financing. Now, for all of us as operating lessors, one of the challenges we always have is when we go into a new market. And even today, there are untapped markets here in Asia Pacific. If you think back 10 years ago, if you'd have said that the largest player in Indonesia was going to be a low-cost carrier, people wouldn't have believed you. Because at that point in time, there would have been a lot of skeptics as to whether you could have financed planes there. Today, there are other markets opening up. Lao Airlines recently took some 320s. Myanmar is beginning to open up. The Cambodian carriers are growing. When you guys consider going to new market, what are the things that you look for?
Well, for me, you think back to India 2003, 2004, we looked for the biggest well-capitalized airlines we could find. Good business plan, very much focused on low-cost carriers. We as a lessor at Avolon have a large proportion of our book focused on low-cost carriers. I thought what was interesting on one of your earlier slides, you listed the top 10 airlines by revenue in Asia. There wasn't an LCC amongst that list. And that just tells you what's yet to happen in Asia. So we're a big backer of Ryanair. We have been for years. One of their earliest backers, big backer of AirAsia, Tigate, you name them. So those guys, when they came to the market, tended to have brought a well thought out business plan that reflected an LCC proposition and had sufficient capital behind it to allow us to invest at an early stage in the right type of aircraft.
So, okay, so just summarise, so business plan, enough capital, and capital either from backing or also from their shareholders and sometimes guarantee.
And of course, credible management.
And management, so those three things. Okay. Leonard, anything to add to that when you're sort of talking to new carriers?
Yeah, I think Simon hit that spot on with having a good business plan, management team, and the capital. Those definitely very important.
Now, what about the regulatory environment? Is there anything important about regulatory environment of new markets? Is there anything that may encourage you or discourage you? Leonard or Michael?
Well, what encourages us is if there's someone else who's gone before us and proven that they can get an aircraft back if there's a problem. But we also look at tax regimes and whatnot to see if it's something that structurally we can do in a cost-effective way that, a few years down the road doesn't come back to haunt us. But you always want to, from our perspective at least, we want to try to get to know each airline that we deal with inside and out, both from management, what their business plan is, what their overall objectives are, and who their customers are. Jackson Square, we're a big supporter of low-cost carriers here in Asia, and we'll continue to do business with them.
Okay. Would you see a country adopting Cape Town as a positive? Is that something that would help you get to the right decision, do you think?
It would be a huge positive. I don't know if that would be the sole factor in convincing us to do business there.
Okay.
Yeah, jurisdictional risk is there, Robert, but it comes, you don't want it to be too high, but I don't think it's a primary consideration. It's something that you analyse at the point of going in to do the deal.
Okay. Now, one final question then, in terms of the way you guys intend to grow, and Simon, you alluded to this earlier, the split between ordering lots of aircraft versus doing sale-leasebacks. There's obviously already that large embedded growth in the marketplace in terms of potential for sale-leasebacks. How do each of the three of you see the balance of your business looking forwards here in Asia? You're the guys who are talking to the CEO back at home and going to be saying, well, this is my mix of business that I want to do. How do you see your mix of business going forwards? Michael?
Well, for Jackson Square, I mean, you know, as an overall business model, we're solely sale and leasebacks for aircraft that are no older than 2 years. That being said, one of the areas where we've started to find a little bit more business from a speculative standpoint, I guess, is that some of these airlines in Europe that currently have large order positions but too much capacity, we've been able to take some of those aircraft off their hands and place them with airlines either here in Asia or other parts of the world. So it's not really, we wouldn't do anything naked, say, but you know, that's a growing part of our business, and looking at the aircraft deliveries that are coming here in Asia to various of the airlines, you know, everyone's guess is as good as mine on how many of those will actually take. But you know, that might also be a way to grow the business.
Okay, Leonard?
Yeah, I think for us, growth will definitely be in the sale and leaseback market. As you know, the last new delivery that we had delivered in April, and you know, we don't have any new orders at the moment, so that will be where we focus, you know, our efforts for sure. And there are a lot of opportunities in Asia.
Okay. And Simon?
Like I said, I mean, we try and keep a balanced approach between placement and sale and leaseback. Having just ordered the Max and the Neo, we've probably done our ordering for a few years now, and the focus will be on the placement of those aircraft, and we try and keep them coming fairly regularly so that there's always feedstock to place. And you know, I think the sale and leaseback market will continue to be there, and will also supplement that. So we will continue to try and keep that balance.
Okay. Are there any final questions from the audience before we close up? Peter.
Thank you, Robert. Extremely interesting discussion. Could I just focus on the Chinese mainland market for a moment? I mean, how is that different from your perspective, and what particular opportunities may there be because of those differences? Assuming there are some.
Chinese banks lending money, did you say, Peter? Sorry.
Just particularly from your perspective as lessors, what different challenges are there in the Chinese mainland market, airline market?
Oh, okay, in the market. We should get Susan to answer that one, but for us, China has been a good market for business over the last 15 years. Traditionally, we have found it easier to place aircraft there than to do sale and leaseback transactions. I think that continues to be the trend. There are a good number of Chinese financiers who can, for a variety of reasons, finance the domestic growth very well. So lessors providing cash, particularly offshore lessors providing cash to that market, are few and far between. So partially that's why we continue to place orders directly with the manufacturers, because we just continue to place planes there, both Boeing and Airbus. So on the airline side, that's how we have worked with them over the years. On the financing side, on the mainland, the market comes and goes. And you know, we may be at the moment seeing perhaps a resurgence of Chinese bank lending. How long that will continue, we don't know. But clearly, we spend a lot of time and have Susan in China specifically to look at both of those markets and continue to monitor it very closely, and I think they will continue to be important and probably growing in importance in the broader global market that we play in.
Michael?
I agree with Simon. I mean, it's a difficult place to do sale and leasebacks for new aircraft, you know, especially with, say, the main three. You know, we found better opportunities, I guess, say on the secondary side buying from other lessors. We do want to have more exposure in China. From a bank perspective, we find they're very supportive for regional transactions. There is a little bit more requirement now trying to convince them to either go back to Europe or North or South America.
Leonard?
Yeah, I think, you know, both guys hit it right on the nail that it's difficult to do sale leasebacks in China, and unless you have an order stream and placements, you know, that's the way to do it. On the bank side, yes, I think the Chinese banks, you know, have been becoming more active for sure, and definitely something, and you know, hopefully, if the tap isn't turned off, that's great, and they'll continue to support.
There's just two things, Peter, I'd add. One is if you go back to Vincente's chart, 27% of those Asian deliveries, if I remember numbers right, basically were going to the top 3 carriers in China. There's huge financing opportunity there for people who want to finance China. The second thing is, China is very different from Indonesia and India in terms of, in China you have very large banks, deep capital base. We don't have the same thing in Indonesia and India. And so those two markets also have very large financing requirements coming up. And I suspect you'll see players like ourselves in the operating lease industry basically wanting to do more business in those markets. Maybe next year we have to be in Indonesia or India for this event. But that is where we'll see a lot of opportunity going forwards. And maybe, do you have a similar view on that, as in terms of you'll probably be more active in Indonesia and India than China?
Yeah, I agree entirely, and it comes back to my point that I keep repeating. We're here to channel funds. We don't really need to channel funds into China, we channel planes. We need to channel funds into Indonesia, and we spend a lot of time down there now. And we've become more comfortable with that jurisdiction over the last 8 years, I would say. India, you know, we channeled funds there, and continue to channel funds there. But you know, those are the growth markets in Asia for us at the moment. And nothing particularly to add to that.
Okay, any final questions from anyone? No? So with that, I'd like to say thanks very much to Michael, to Simon, and to Leonard for a very interesting panel. And guys, we look forward to seeing you next year. Thanks.